Well, happy Friday morning. We made it through this nice shortened week thanks to the Labor Day weekend to start us off. With regard to the mortgage bond market this morning, we are seeing another down day. This will be the third in a row, assuming of course that it closes down. On Wednesday it was down just 3 basis points, not a big deal. And yesterday it followed that up when we got some fairly decent news with regards to the jobless claims, all better than expected. That ended up closing down 16 basis points for day number 2 in a row. And today, currently, we are down 28 basis points. And overall, that puts us at a price for the Fannie Mae benchmark bond of 103.58. What that does, that's just basically 8 basis points off the first support level. It actually tried to get through the support level this morning and bounced off of it. It went down to 103.51 and has come off a little bit since then. So we're up about 7 basis points off the low. But overall, it's completely wiped out, and then some, the nice day that we had on Tuesday. So thankfully for that nice day that we had on Tuesday, we're not down too far. But we are at the very bottom end of the range that we've been in since July 29th. And I think that what's happening is the traders might feel like they got a little bit ahead of themselves on their Tuesday move. And then when the JOLTS report came out on Wednesday and showed a fairly strong job market, as well as the jobless claims that we had yesterday that were better than expected, I think that maybe helped them to reel in their hopes of a non-raise of the interest rates by the FOMC on the 21st. So I think we're probably going to be trading in a pretty tight range. We have a few semi-key pieces of data between now and the Fed meeting. But I think we're going to stay in a tight range, and they'll make their move after the meeting. Now, what I expect is that if the Fed decides to raise rates, we're going to see some selling, and rates are going to be even higher. If they decide to stand pat because they don't feel like the data has been strong enough, then I think we'll see some more buying, and I think that'll push rates a little bit lower. Currently, if you read my blog post yesterday, I did recommend to lock. I recommended that in the morning, and rates deteriorated a little bit throughout the day, and of course they're getting worse this morning than they were yesterday. So hopefully you read my post and you followed the recommendation to lock. If you didn't lock, I would probably still play it safe just in case there's further downward movement, but considering the fact that we are at the bottom end of the range and there is a fairly strong, what looks to be a fairly strong support level, because that has been tested 1, 2, 3, 4, 5, 6 times over the last 2.5, 3 weeks. So considering that support level is pretty strong, I think it would take quite a bit to break through there, so you might be safe floating. So no more data today. Wholesale inventories came in a little weaker than expected, but it's older data, so not a big impact on pricing or anything. So there you have it. As always, I'm happy to help. I'd love to help you out if I can in any way. Feel free to contact me at 702-812-1214. Make it a great day and a better weekend.